welcome to the Hardcore Finance Show with Shimon. Alex is not with us today. And today we have a very special guest, Croesus. Croesus is an awesome Twitter handle that I've been following his stuff for a very long time, and I really love the way he explains Bitcoin. So excited to chat. Welcome to the show, Croesus.
Thanks for having me.
Yeah, awesome. So maybe you can tell our listeners how you got into the space of Bitcoin, and like since you got in it, how has your journey been?
Yeah. So as you know, we have somewhat similar backgrounds. I was in the consulting world, got an MBA. When I was in business school, some of my more technical classmates were buzzing about this new thing called Ethereum. This was back in 2016. And I took an interest in it and sort of stumbled down that rabbit hole, and saw the value proposition of digital value being a complement to the way that the internet has digitized information, and how we exchange information, and that naturally having the ability to store and exchange value securely online would have a place in the digital future. So that brought me into the Ethereum frame of mind, and I was interested in Ethereum and other altcoins. 2016 to 2019, did well in the bull market, got hammered in the bear market, didn't understand why. And that forced me to dig in a lot deeper into like why are we in a bear market? What's going on here? Why do we have these once every 4-year bull markets? And why is it that Bitcoin, this ancient technology in the crypto land, this super simple network compared to these other more modern ones, why is it that it is dominating and consolidating its strength during the bear market? And so that course of inquiry, trying to figure out what was driving that and digging in deeper to try to understand the perspective of Bitcoiners, Bitcoin maximalists, those toxic people you find online that are really unpleasant to talk to. In the course of trying to understand that, I realized, wait a second, there's something here. There's a lot here. And in fact, what appears to be happening is that this is not really about technology. It's not about having superior transactability. Instead, it's a monetary revolution. It's a breakthrough in money that was enabled by new technology, decentralized networking, and that's really the innovation. And that's why Bitcoin keeps doing its thing every 4 years based on its own internal supply schedule, have these halvings, as they're called, once every 4 years. And that's what's driving everything. So I have, I've taken this full arc of getting interested in the altcoin side first and Ethereum. And then as I got deeper, I eventually realized that, what is happening here is Bitcoin is bootstrapping itself from nothingness, having literally zero value, to becoming an increasingly scarce, reliable, valued, and valuable store of value over time. And that those mechanics are set to continue. They're pre-programmed, set to continue for the next century. And that's the phenomenon we find ourselves in. And that's why I've come around to the perspective that Bitcoin is the only thing that really matters here. And it's going to keep doing its thing, one halving cycle at a time. And the whole world is slowly going to come around to the economic reality that Bitcoin imposes on everything.
This is awesome. And so you said a very interesting thing there, which is like, it's basically money. And it's interesting to me, when did you realize that the money was broken? Because like, I'll tell you what perspective I came from before discovering Bitcoin, which is like, so I was born in an ex-communist country, Bulgaria. I moved to Israel when I was like 7 years old. both of these countries had a hyperinflation event
Mm-hmm.
before I was born. So no, sorry, Bulgaria had a hyperinflation event after I left, where they just like slash 4 zeros or 5 zeros out of the currency, and Israel had it in the 80s. So for me, I basically looked at, for example, the Israeli economy. It looked very stable, right? Prices are stable, everything's kind of stable. And like my family was like, yeah, real estate goes up a lot, but that's okay because you just buy it. And, if you have cash put in the stock market, it kind of protects you against the inflation. That was kind of my mentality before I discovered Bitcoin. So what was your kind of way of saying, oh, money is something we should look into?
Yeah, it's really interesting. It's a consistent theme you hear from people who have gotten Bitcoin earlier than the rest of the world. And to be fair, we're still in that portion of the tech adoption curve. We're still, from my calculations, we're about 0.5% into what will eventually be the portion of the world that adopts this technology as a superior savings technology. So yeah, we're still in that phase where having life experiences that are, a standard deviation or two away from the typical Westerners' experience in life with regard to how they experience money and their trust in the stability of money matters a lot. It's interesting that like thinking of some of the more notable early adopters of Bitcoin. Just off the top of my head, there's like Wentz Cesaris, who's Argentinian, and Brian Armstrong, the CEO of Coinbase, lived, I think, for only like a year in Argentina, but enough to get some of that cultural wariness about money from the inflation Argentina's seen. And similarly, like VJ, who wrote the bullish case for Bitcoin, he has this family story of his dad having to cross national borders, flying from Australia back to India, carrying all of his family's wealth in gold on his body on the plane, because there was no safe way to transport that value across borders, and that was the safest way, which is insane. So these family stories and life experiences seem to be driving or at least influencing many of the earlier adopters to see what the rest of the world hasn't quite yet appreciated yet in terms of the superiority of Bitcoin in terms of its security and safety and portability. So for me, I grew up in America and in a way had that disadvantage of not having family or national monetary wariness that pushed me towards Bitcoin earlier. And I think that's probably part of why it took me 3 years of being invested in this space to realize that, the Bitcoin is the thing that really matters, as opposed to these flashy new platforms and technologies that are trying to carve out a space for themselves in smart contracts or whatever else. So I think there were a few moments for me that I remember of there's this process of losing faith in the Federal Reserve and losing faith in the responsibility, the responsible nature of the powers that be at the Federal Reserve and the Treasury, and monetary policy generally in the West. I think a big thing for me was spending time just looking at the M2, the money supply chart, and the M1 chart, which I'm sure you're familiar with, but for those who aren't, it's an exponential curve up and to the right. And I ran my own calculations on so what's the CAGR here? What's the annual growth of that we've been seeing in the growth of the money supply? And if you go back to 2010, ever since the last, the financial crisis, what has been the annualized growth rate? It's actually 8%. before COVID, and the 26% since COVID. So, but if you just think back to before COVID, 8% is a much higher growth rate in the money supply than the inflation that we're told is good, and the inflation target of 2% per year that the country aims for. And that didn't add up to me, of if you're adding to the money supply 8% every year, how are you only driving 2% inflation?
Mm-hmm.
And does that distribute evenly? That doesn't sound right to me. And then so digging in more into how CPI is calculated, and the fact that CPI as a basket of goods has changed quite a bit over the last few decades. And if you were to maintain the basket of goods from previous decades, inflation would be much higher if you had kept that basket of goods and calculated things based on that. So the official government numbers seem to be moving in a way that favors low inflation. So that's not adding up either. And then reading Jeff Booth's book, The Price of Tomorrow. If anybody hasn't read it, it's extremely good book.
Yeah, highly recommended.
Yeah, and Jeff Booth is a very successful tech entrepreneur, serial tech entrepreneur, and it's a simple idea that he conveys, but it comes down to technology, and the progress of technology's drive is a deflationary force. We get more for less over time. Think about the travel booking industry. That used to be a full-blown industry, and now it's free because we have kayak.com and whatever site you prefer. And that example extends to every industry that tech has touched, which at this point is now every industry. And so we get more for less. So tech is shrinking the economy, and yet our monetary system, our policies there are predicated on an assumption of continuous growth, because in a debt-based in a monetary system that encourages levering up, you can't lever up if the value of your debt in purchasing power grows over time. You get crushed by your own debt burdens that you took in the past. So you have to achieve inflation, and if your economy is deflating because of technology giving more for less, then you have to offset that by printing enough money to get that number into the positive, right? So that's how you get that 8% of, if you're trying to hit a 2% target because you've decided that's the optimal number to enable the monetary system that you want of a debt-based system, then you have to offset, let's say it's minus 6% in technological deflation.
Mm-hmm.
To get to 2%, you have to print 8% more money every year. And that seems to be what has been happening over the last decade, and to a less extent, extending back beyond that. So it was, I guess, this process of looking at all the evidence, the government data itself, realizing that things weren't adding up, and then finding like an Occam's razor solution. The simplicity of technological deflation, and the fact that a deflationary environment is at odds with our monetary system as it exists, and something's got to give, which is Jeff Booth's thesis. That is elegant in a way that nothing else is to explain the facts at hand. And that clicks, So I think for me, it was this process of losing faith in the narrative that has been put forward by the government and the system generally, by questioning the data and finding an alternative narrative that is way more elegant, and cleaner at explaining the facts at hand.
Mhm. Yeah, no, it's amazing. I can agree with so many of the things here. My moment of kind of red pill before I even knew about Bitcoin, but when I understood the system is really broken, is so in my MBA, I took a course called Money Markets and the Fed. It was an amazing course because it went really, really deep into how the Fed works. And our professor was extremely Keynesian. I went to probably the most Keynesian school. It was Kellogg, which is, they have, it's Northwestern University, so they have a rivalry with Chicago. And like, the Chicago school was always considered, the conservative, like, how do you call the people that opposed the Industrial Revolution?
The Luddites?
The Luddites, yeah. So we were like, oh, they're conservative Luddites, and our professors would be like, yeah, here, if we actually drop money from a helicopter on a city, like this is what will happen to the city, and in the long term, we're all dead. It's all these things, like people took pride in them, and things that in the Bitcoin space were like, this is terrible. For those of you guys who don't know, in the long term we're all dead is a sentence that Keynes basically said, where he was talking about like stimulating the economy through printing money or through borrowing and spending it, right? And somebody said, okay, this will help in the short term, but like in the long term, you have to pay back this debt. And his response was, in the long term we're all dead. And it sounds kind of facile. It's not really facile because he had a point. He basically meant he was a big believer in technological innovation, Keynes. And so he basically said, look, in the long term, by the time we have to like face this problem, something will come, and fix it. Like he didn't mean it, like he wasn't stupid. But my point in the money markets and the Fed course, the big thing they were saying, look, we have to keep price stability at like 2% increase, and we have to keep full employment. I'm like, both of these things sound terrible to me. Like, why do we need full employment? Like, why can't we work only 30% of the time? If we could work only 30% of the time, or if 30% of the people could work and the other ones could rest, that doesn't sound too bad if we can give everybody like a high quality of life. And it's the same with the price stability, like what you said, like, why do we want the prices to be going up? Like the only reason is because of the debt. Otherwise, let's at least keep them at 0% increase, right? So, but I didn't have an answer back then. I was like, okay, I guess, that's the system we're living in. And it's sad because I was working at a startup that was very much, everybody knew about Bitcoin because it was a cloud security startup here in San Francisco with like Stanford professors in cryptography. And all of them were basically, Bitcoin is like super powerful, but like the government would never let it exist. And that's it. That was like the end of the conversation. So that was back in 2013, I think. So too bad I listened to the professors working at my startup.
It is so funny how we've, I don't know, it's easy to forget. It's easy to assume that Bitcoin is the first attempt at this, but there's this long history, 30, 40 years of libertarians, crypto anarchists, whatever you want to call them, trying to create a non-sovereign money, and every one of those attempts was crushed by the government or some failure of the code. And typically because there was some centralized entity that the government could come down on and destroy, like what happened with Mojo Nation, for example. And there's a great little series of I think it's 4 10-15-minute YouTube videos, well produced, from Reason. You can find it on their YouTube channel of like the prehistory of Bitcoin. I think it's called Cypherpunk's Write Code. And it just kind of walks through the evolution of this community over the 30 years before Bitcoin and how the various attempts led towards Bitcoin and finally, some breakthrough success that the government couldn't shut down, hasn't been able to shut down, has tried to, like they did with the previous attempts at creating a form of money outside of the purview of the government. But it 12 years later, it's still here, which is $1 trillion monetary network, which I think is as close as you can get to proof, or at least strong evidence that the government can't shut it down. Not that they haven't tried, because all these other earlier iterations were crushed long before they reached $1 trillion scale. It's not like the government has wanted Bitcoin to exist, and it's not like the government hasn't tried whatever angles they can to shut it down, but it's still here.
Yeah, and it's interesting that basically the government, of course, they'll try to shut it down, but I think with this being the first kind of global thing, it couldn't exist before the internet, right? Like there were so many attempts at cryptography, early on in the 70s and 80s and stuff. But now that you have the internet, it's just like idiotic. Like you can only ban yourself from it. I really like how I think there was a debate between Anthony Pompliano and Mike Green. And this Mike Green guy, I don't know what's his problem, but he's all about, oh, it's Iran, it's like terrorists use it. And so like Anthony Pompliano was like, look, like the only thing you can do is like sanction yourself. Like when we sanction Iran, it's like we prevent them from accessing a global network that transfers money. This is a global network that transfers money. So good luck. Like the only thing you can do is like sanction yourself. Do you want to sanction yourself? And like the guy was like, oh, he didn't have a good answer.
Yeah. And that comes back to this really interesting, it's game theory, and having a certain familiarity with, or at least thinking through the various points of view in this game theory problem with regard to Bitcoin, I think is helpful to understand why this thing can't be shut down by nation states. That ultimately, from the point of view of each individual nation, they could really clamp down on the on-ramps and off-ramps to Bitcoin, which we've seen recently in like India. But ultimately, you're preventing innovation in your country while it happens everywhere else in the world, and that's shooting yourself in the foot. So from a game theory point of view, governments are between a rock and a hard place here of like, well, we don't want to give up control of our money, so we can't like actively encourage this innovation, but we also can't like try to stymie this innovation, because not only will it develop elsewhere, and maybe we'll miss out on the next big wave of technology innovation and wealth development. Not only that, but we might drive away the early adopters who have a lot of Bitcoin, who have a lot of wealth in the system, and maybe they'll go to Malta or Singapore or whatever and take their wealth with them. So yeah, from a game theory point of view, it's fascinating how governments are in a position where they kind of have to at least tacitly allow the development to continue, which was the policy with the internet in the first place. This system that enabled free communication is in the early 90s. That's a dangerous idea from a government's point of view. And the US was really smart to provide loose guide rails to allow it to develop and keep an eye on it. And as a result of that, we got Silicon Valley. We became the epicenter of the next major wave in the development of our economy, the global economy. And all of that success is because of that smart government policy to allow this innovation to develop, and then hopefully figure out a way to integrate that successfully with our existing system of government and information dissemination. That worked great. And we're starting to see the SEC, like Hester Pierce, saying that it would be unwise to shut down Bitcoin or try to clamp down on it, because you'd miss out on all that innovation. Like, they get it. At least powerful individuals in the government get it. And I think that trend is increasing as we're seeing more like senators being open Bitcoin supporters, like Cynthia Loomis and Warren Davidson. So yeah, it's interesting watching this slowly develop before our eyes.
Yeah, and I'm actually very bullish on the U.S. government. First of all, because of what you mentioned, they were very smart to let the internet develop, and also, I'm working with the state of Illinois with Representative Margaret Croak there. She wants to basically have the most progressive crypto bill in the state of Illinois, which is like even more than what Wyoming has done, which
Mhm.
is to allow banks to lend against the Bitcoin. And she really understands it. Like there's this fascinating thing in the US government where you have the states versus the federal government. Many of the states, they don't like the fact that the federal government prints money, which basically means that your tax revenue as a state, it's fixed in dollar terms, but like it buys you less and less when the
Mhm.
government in Washington prints money and then spends it on things that don't benefit the state. So that's like one thing that's very powerful. And then the other thing, I'm actually working on a little idea. I thought of writing a blog post, but then it became too long. Then I was like, maybe I'll make it into a book, but that's too long and I don't have the time. But my idea is calling it the privatization of money.
Mhm.
So why governments will allow Bitcoin to exist. And the thesis of that book is basically, if you look at any privatization, right, there's many, many times throughout history of the state controlling something, and then at some point deciding to sell it to a private company, and it ends up making more money from tax revenue when the private company runs it than when they just get 100% of the profit when the state runs it. And you have many, many examples of telecom and of different industries and in the old USSR bloc. And so I was starting to think, okay, let's say I'm a benevolent guy, and let's say I'm, super charismatic, and I run on a promise that I'm not going to print money, and somehow I convince like everybody to elect me. Let's say I have full control of the Senate, full control of the House, and I just say I'm not printing any more money, or whatever. We're defaulting on our debt, or we're something against printing money. The next election cycle, someone's going to run against me and say like, I'm going to print money and give it to you. And then
Mhm.
people will elect them. So like, as long as we have a democracy, even someone with really good intentions will basically realize that he cannot like not print money. So I think, and maybe I'm too optimistic, but I think that people understand that like having this layer of monetary information that can't be screwed with, like you can distort it, will bring prosperity and it will increase tax revenues. But as long as we're living in a democracy, it's not going to happen unless it's out of the control of the government. So I'm hopeful. I'm an optimistic guy. So maybe it's too optimistic, but hey, maybe the more and more governments, even it doesn't have to be a 0 or 1. It doesn't have to be like a ban or like a free for all. It can be like governments that are more progressive towards Bitcoin, they just prosper more and then they're more powerful. What do you think of that?
Yeah, I think that's what's going to play out here. I bet that some government has already added Bitcoin to their reserves quietly, silently, um, and that's going to continue because at the end of the day, Bitcoin's mechanics cause it to appreciate in value every 4 years because of the halvings and the reality of what happens when you cut supply in half and demand stays the same, right? It drives up the value of that commodity, um, because and it's we've never had an example of something like this, that has those mechanics, and I think it's impossible for us to. It's a really difficult thing to wrap our heads around. We have a species level understanding of markets, right? The supply and demand and the ebbs and flows of both sides of that equation. Because in the physical world, it's always possible to increase supply or decrease supply. How much you're mining gold can vary, but Bitcoin throws that off, and it is a fixed supply schedule that is, completely inelastic to change, how high demand is. So that causes Bitcoin to appreciate in price over time, every 4 years. and more of the world will come to realize those mechanics. And as more of the world comes to understand that that's what's driving this thing, more people will seek to store their value in Bitcoin versus dollars, which are being debased at generously 8% per year, but recently much more than that. So, right there's your decision, right? From an individual point of view, everybody in the world has this choice to make. And they're making this choice whether they know it or not every single day. They are defaulting to the status quo typically, and that means they're choosing to be debased at 8% per year. Let's call it 10%. Holding their wealth in dollars, or as people do, they are putting it in the stock market because that is a hedge against inflation, because as more money is printed, it bids the stock market and everything goes up. But yeah, because of the reality of Bitcoin's design, it will continue to increase in purchasing power every 4 years. That is baked into the mechanics. It's pre-programmed. Nobody can change that. And so all it takes is individuals or government agencies, or the individuals within those government agencies, to recognize and get comfortable with these mechanics that are playing out, and realize, what, this would be a better thing to add to our reserves than even gold. And so maybe we should have a little bit of that. And so you can see how this snowballs into a global race between nations to stockpile a Bitcoin reserve, or at least shore up your own balance sheet as a country to not just be held in dollars or held in barrels of oil or held in gold, but to diversify into this new digital store of value as it continues to mature and become Lindy, as it's called, of trusted and expected to continue into the future. So because of those mechanics, this whole, everything that's happening in the world is pointing towards this future of more and more individuals and countries appreciating the value of holding Bitcoin and wanting to do that on an increasing scale. And we're just watching it play out in such slow motion, because it happens on a 4-year time scale, that it's hard to notice that it's even happening. But when you zoom out enough to notice, to think about where we were 4 years ago in terms of the normalization of Bitcoin as an asset to hold, it's night and day.
Yeah, I mean, sometimes I can't believe it. My wife doesn't understand, at all anything about investments and stuff. So when I told her, okay, I'm putting a significant amount of our net worth in Bitcoin, she was like, sure, whatever, no problem. But
has that increased over time? As you've learned more, have you been upping that?
Oh yeah. So for me, I bought my first Bitcoin in 2016. I think it was 2 of them. And then I bought towards the peak of 2018. I think it was around $13,000, and then it crashed. And then I was just lucky because I had some cash, so I bought kind of all throughout 2018, 2019. So it's been kind of a continuous thing. I haven't bought recently just because I don't have any spare cash. But yeah, I'm pretty happy.
It's also so hard to, once it's hard to move the needle after you've caught one, bull market, right? It was easy to stack. I mean, my last stacking that I was doing aggressively was about a year ago. And back then you could get a million sats for $100. And now you can get less than 200,000 for $100.
Yeah.
And it's hard to feel like you can, you're moving the needle as much as when you first got in, which I think is this risk that people don't realize when they first get into Bitcoin of I see a lot of my friends doing this of they get a 2%, 5%, maybe 10% allocation, just as mostly as like a hedge, or, you know, just in case this thing takes off without them. And then lo and behold, it takes off.
And then it's like 50% of your portfolio.
Yeah, right. And so if you have a 5% allocation and it 10x's, you know, the math doesn't quite come out to it, but yeah, you end up with like a close to 50% of your money in Bitcoin, and you never really did the work to understand it well enough to have a 50% allocation in the first place. You're still at a 5% level of understanding, and now you're starting to think about shaving some off, because it's uncomfortable to hold 50% of your wealth in Bitcoin when you have a 5% level of understanding. It's funny how that goes.
Yeah, and back to life experiences. I was actually very lucky to have two formative life experiences. One is I bought Apple in 2006 with like a lot. Like, I mean, I didn't have too much money back then, but I put like half of my net worth in Apple, and it 4x'd. And I was like, oh my God, I'm a fucking genius. And I just sold everything, right? And again, during business school, like I bought like Google, Amazon, all of these like tech stocks. And yeah, I think they doubled or something. And I was like, okay, I'm a genius. And I sold it. And then looking back, you know, in hindsight, this was like 2011. So like looking back, if I just held on to it, it would be like completely life-changing. So I don't believe in rebalancing. Like, I just think if you are lucky to get something that's a significant portion of your portfolio, you know, not financial advice, but if it were me, I would just keep it.
Yeah, I had a similar experience of my first time like foraying into picking stocks. I was still in grad school, and I was interested in, I approached the stock market based on like, what are the products in my life that are driving lots of value for me and I think are undervalued. And the two clear winners for me as a grad student were Netflix and Chipotle, because I was getting a ton of utility, a ton of value out of both of those products. And so I put money into those two stocks, and over the next 4 months, they lost like 30%. Right. And this was, you know, a decade ago. And I thought, well, I guess I was wrong, and the market knows better than me. And I was foolish to believe that, you know, this was a viable way to approach the stock market. And I sold. So I took my 30% loss. And then those two stocks ended up being two of the highest performing stocks for the last decade. I was just too early, right? Like the experience that I was having as a digital native grad student, you know, at a college campus where Chipotle had already established a foothold, and, you know, it hadn't yet penetrated the suburbs, basically. That was cutting edge, right? So I was living a cutting edge life at the time, and I invested based on that. And then I let the market shake me out, and I let the market tell me that I was wrong. And it turned out I was just early. And so I think that is also, for me, part of why I have a conviction and you know, iron hands when it comes to holding Bitcoin. Is I'm fully convinced that the world just doesn't know enough about Bitcoin yet. And when 10% of the world learns half of what I know about Bitcoin after thousands of hours of learning about it, it'll be $1 million per coin because everyone will want to own it. We're just too early still.
Yeah, and this idea of the privatization of money really lets me think that everybody would want to own something that other people cannot vote it away from you. Because like everywhere around the world, especially with COVID and everything, we're seeing like democratic processes just like lead to really bad outcomes. And so I think everybody will kind of understand it over time. I think it's going to be more than $1 million per coin, but it might take 50 years. Like that's the other thing. I was really impressed by Michael Saylor. I never thought of this method, but basically I don't plan to ever sell my Bitcoin. I just want to borrow against it. And like, as long as you borrow like 2% or 3% of your total value every year, and it goes up by like whatever, 200% on average, but let's say at a steady state, it will go up by like 10% on average or whatever the
Yeah.
productivity growth is, you basically never have to sell. And I think more and more people will figure that out. People are actually doing this with real estate, right? That's like a home equity loan. When people take a home equity loan and then they use it for a down payment on an investment property, that's exactly what it is. But somehow with stocks, it's less popular. And with like other financial instruments, it's even less kind of in the mainstream.
Yeah.
But that's my plan.
Yeah, I do buy into this idea that Bitcoin is pristine collateral, because it's dematerialized, it's connected to the internet, and it's easy to govern and move around.
You mentioned the stock market. I have an idea of why Bitcoin is a better protection against inflation than the stock market, but I really wanted to hear what you think about it, because on the face of it, right, that's what wealthy people use. They use real estate and the stock market pretty much to park their wealth. The idea is like the government prints money, it trickles down. If you buy an index, you kind of get, the upside of the printed money. At least it's better than other things. Like I don't know almost anybody that holds large amounts in cash. So why do you think, or do you think that people will choose to hold Bitcoin as opposed to stocks? Not individual stocks, but more like an index?
Yeah, it's a great point. I think this is like the heart of the whole Bitcoin inquiry. Like this is a big part to me of digging down into the rabbit hole. As somebody with a business background, for anybody who has an MBA out there, like this is a good question to ask to dig into, kick the tires on Bitcoin. So you're right that people store their wealth today in real estate and equities. And why is that? Well, that's because those are the two categories of scarce assets that we interact with in our current financial system. And I'm sort of excluding gold from those considerations.
Yeah, I think gold is a no-brainer. I think all of the gold market cap will move to Bitcoin. I mean, most of it will move to Bitcoin just because it's better, right? It's gold that you can just beam anywhere and store.
Yeah, and I sort of think that societal process of sunsetting gold as a store of value has already begun, because we don't interact with gold anymore in the fiat system. We interact with equities and we interact with real estate. And investing in gold is sort of an investment in the hope that if the fiat system collapses, we'll fall back to what we did before, which is gold. But you're right. I believe that in the digital age, we will just shift to digital gold and Bitcoin. But yeah, getting back to how we store wealth today, it's all based on scarcity. This scarcity idea is hardwired into us as social creatures. We value what is hard to have, hard to attain, what is a symbol of status in our social communities, and those are things that are scarce, right? So having that big mansion, having that big piece of land, that is a hard thing to have because there's only so much of that. Similarly, it's hard to own a big chunk of Apple because there's only so much of it. But what does Apple represent, right? Apple represents the dominant profit pool within the mobile sphere, right? I guess it's safe to say that's where most of their revenue and profit comes from. So really what you're owning when you own a big chunk of Apple stock is you are owning a percentage of this scarce asset that is the mobile market, right? The phone market. And so that's what you own. At the end of the day, the Apple is sort of you think of it as like a pass-through entity of like, you're just using Apple to get exposure to this market. And Apple just happens to be the leader of that market. So you own a fixed percentage of Apple's fixed percentage of the market that they're participating in. So at the end of the day, these are things that are scarce, and things that by definition, because of their scarcity, are divorced from the money supply, right? Like there's only so much land. So if you were to double the amount of dollars in circulation, well, now double the amount of dollars are competing over the same amount of land. So ostensibly the value of that land would double. Same for equities, because at the end of the day, it's a fixed size of market in terms of purchasing power relative to other markets. These things are fixed relative to every other market in the global economy. So if you, in the same scenario, if you were to double the amount of dollars in existence, people are bidding for the same ownership of a given market with twice as much money in circulation. So it's a nice hedge against. It's not so much a hedge; it's protection against inflation and just debasing the money supply. And I think societal wisdom has honed in on this reality that you can't store your savings in dollars or bonds, but you can. It makes sense to try to own a fixed percentage of something scarce, like the real estate market, or the mobile market via Apple, or the streaming media market via Netflix, and as a result of that, like societal wisdom propagating itself, or being refined over the last half century that we've existed in this current fiat system and environment of reducing interest rates, dropping from 15% in 1981 to 0% effectively today. That's where these lessons, this wisdom has emerged out of the most recent 50 years of learning, and that's where we get the nudge from our parents' generation to store your money in the stock market because it only goes up. That's what they've learned over the last 50 years. That's the smart thing to do. And that all comes back to scarcity. And now with Bitcoin, there's a new scarce asset in town, and it doesn't rely on like gold. It doesn't rely on this assumption that we're going to go backwards to a less efficient monetary system, one that involves minting coins and subdividing and assaying the purity of a monetary metal, but instead relies on the digital advantages of the digital age. And baked into its monetary policy is this design that has never existed before of increasing scarcity over time and a complete indifference to increasing demand with regard to increasing supply. That's not a part of the system. So when you compare in storing your value in real estate versus storing your value in Bitcoin, the difference is that with real estate, they're not making any more of it. So you can store your wealth in something fixed and scarce. But with Bitcoin, they're making less and less of it over time. So every 4 years, the amount that's being produced is cut in half. And so that holding a Bitcoin, that Bitcoin will become more scarce, more valued in the market because there's going to be less supply over time. So, they're both scarce assets, but one has increasing scarcity over time. And on top of that, it also benefits from the tailwinds of the rocket fuel of being early stage technology. in the sense that it's early in the adoption curve, that most people don't understand Bitcoin, don't own it, don't think it has any merit yet because they don't know anything about it. So not only is it a scarce asset, it has increasing scarcity, and it has early stage growth underpinning it as well. And that's why, the mechanics of Bitcoin point towards it outperforming other scarce vehicles like equities or real estate over the next, I don't know, and until the whole world has figured out that Bitcoin has superior properties in terms of being a store of value, which might take 20 years or it might take a century. We'll see.
Yeah, totally. I completely agree with those points. And I have another point, which is it's kind of the same thing, but said in a different way, which is I got this inspiration from Michael Saylor, thinking about Bitcoin as a battery that basically holds your energy. Now, if you think about it, real estate is very scarce. It's also a battery that holds your value, but they can make more of it in the sense of they can build buildings that are taller, or they can, have self-driving cars, and so people move like to the suburbs, or they can have like remote working, and so people move to like a warmer place with good beaches that is far from San Francisco. So that is the inefficiencies of the battery. So like there are inefficiencies, and there's technological disruption that can happen to the effectiveness of the battery in storing like your wealth. And you can say the same about the stock market. Like in one sense, you can say, yeah, the S&P 500, it's 500 companies. They don't make more companies. They can rotate in and out of the index, but it's like the index is kind of fixed. But you can put taxes on the employees, you can put regulations, you actually have to do all this activity. Like, companies actually have to produce things, some of the things work, some of the things don't work. And so it's another inefficiency. And Bitcoin is just the purest way. And again, your point is amazing about the scarcity going like, it's becoming more and more scarce. It's not just fixed, but even at a steady state, when Bitcoin is fixed, I still think it's just a more efficient way to store your money, because you don't need the parking lot at Google where people park their cars. Like, why should I pay for the parking lot at Google in order to invest in Google? Like, it doesn't make sense. And also another thing is that it's untethered from anything in the physical world apart from energy, but we can talk about that. But the point is, Tesla is tethered to real stuff. Like, if the price of Tesla would go to $10,000 per stock, people would say, okay, there's not enough cars in the entire planet that can justify this valuation. But what's cool about Bitcoin, it's like it's not tethered to anything. It can have an arbitrary price. And sometimes, like, the more I think about it, the more I think, was it pure genius of designing this, or was it a fluke? But in any case, it's amazing. So that's why I think that even at a steady state, it will be a better store of value than the stock market or real estate. But Alex and I have very heated debates about that.
Yeah, I think you're completely right. I think that comes back to like, that is part of human nature. It's part of the like constant competition of humans and human groups. We amongst ourselves try to get more than each other, right? That's just that's how life works. And then we try to store what we've attained in some sort of economic battery, right? Like, and equities, because you own a fixed percentage of the global economy, basically by owning, the stock index. That's a decent way to do it, but there's a lot of friction, as you point out, and there's a lot of inefficiency. Real estate is the same. You pay property taxes. They're making more real estate. So yeah, I sort of omitted that with my, I imagined, I sort of characterized equities and real estate as being a fixed pie, but they're not. They inflate in supply over time. With real estate, they're making more land. They're converting swamp into usable land. They're cutting down rainforest and turning it into farmland, and that threatens the value of your farmland in Nebraska. And then, of course, they take land and build buildings on it. And they, in New York, they tear down a 5-story building and put up a 20-story building. So there's growth in the supply of those economic batteries. And in that sense, when you store money value in real estate, you're finding your value being diluted every year, but based on the growth in supply. Maybe I forget what Plan B with his stock to flow model did a good job of trying to approximate the growth rate of real estate in terms of supply.
Real estate, that was hilarious.
Yeah, it sort of conforms to the neat logarithmic pattern with other commodities as in terms of being a store of value. But yeah, so even real estate has inefficiencies, and you're being diluted over time. And what Bitcoin represents with this concept of absolute scarcity, of having a fixed amount, at the end of this, once we've gotten through the stage of increasing scarcity and you reach terminal scarcity, absolute scarcity, that's a much more efficient battery, economic battery of in terms of its how much energy it's losing per year, because from a supply point of view, it's not losing any. Maybe I guess what you lose is the transaction fees that you have to pay to participate in the system. But from a pure storage point of view, its fidelity, its capacity to store value over time is orders of magnitude better than any other store of value asset that exists today. And the world is slowly going to realize this in the same way that over the last 50 years, the established wisdom that has emerged is, buy a house, pay off your mortgage, and invest in the stock market, because those are the store of value categories that make sense in an inflationary fiat paradigm. And that wisdom, it took us 2 generations for that to become, for society to settle on what is the right formula for that paradigm. And similarly, it'll take some time for everybody to figure out that that's the case with Bitcoin, that this is the new established wisdom, and it's currently establishing itself.
Yeah, totally. Well, Croesus, this was fascinating. I'm so happy you came on the show. I hope to have you again at some point, maybe with Alex here. I was kind of agreeing with you. I'm sure he would have tons of points.
Yeah, let's do that. We'll get into the other side of the argument.
Totally. But please tell our listeners and viewers, where can they find more about you and your work?
I spend a good bit of my time putting out like educational content, sort of putting to work my skill set as a management consultant from the past to create Bitcoin educational content, which I just post on my Twitter, which is Croesus_BTC. It's CROESUS_BTC. So yeah, you can find me on Twitter there, and yeah, drop me a message.
Yeah, I highly recommend Croesus's infographics about the halving. There's so many good ones, so you should check it out. I'll also add it to the show notes. And yeah, thank you everybody for listening in, and we will see you next time.